Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Lynn & Associates with your morning flash update for this Thursday, the 4th of May, 2017, about 9:25 a.m. Central Daylight Time. All right, stock market's stable. They try to break. They try to rally first, then they broke down. Now we're coming back in a number of the indices. Today you're going to hear news about a couple of commodities. The gold market, down $20 over that at one point, coming back a fraction, but nothing big there. The dollar index starting to lose momentum again. And for those of you that are embedded slow stochastic fans, very, very important day today. If the market can stay under pressure, it'll keep the embedded reading. It had tried to lose it this morning, coming back there. Look at energies, take it on the chin. Now, nat gas, you can't count in this. Eventually, it's going to get warm, and when it does, the demand's going to show up there. What continues to go on, and I wrote about it last night, is if you looked at the EIA numbers, they're not good. You keep getting builds in the gasoline that the market is not looking for. In distillates, you took a little more off the market than you thought, but it's still this much of a fraction, and we're just not taking enough out of the crude. So the U.S. crude keeps hammering away at the market. Now, understand, $46 is a different production number than $50, $52, $53. And that could be a number that starts, if you will, waning off the addition of rig counts. We'll see. A lot of hedging's been going on. So those numbers, there could be counts of rigs coming on when you hedge product you didn't yet have, and that could have been done very easily. So we'll see what goes on there. In the grain markets, we're still feeling the aftermath in the wheat that picked up all these markets. Corn's at a key number here at the 370 level. Bonds and notes. Now the market, after the Fed out of the way, the market is building in, as I said. And I wrote about this last night, that June rate hike. A lot of people think it's coming. I don't know about the balance sheet shrinking that the Fed talks about because they didn't change their language. I don't see them doing this next rate hike and then at the same time starting to shrink the balance sheet. Plus, big plus, is Ms. Yellen going to be the one to do it or another Fed director? I think that's still going to stay on hold for a while here, so I think you very, very gingerly watch and see how that all plays out. In the day's news, trade deficit. Exports 190, imports though down 239. So President Trump, come on, this is your kind of number. You wanted better trade deficit, you're getting it. Jobless data down 19,000, the claims to 238, they expected 248. That's a positive number. That's another reason the bonds and notes are dropping right now in the futures, higher rates. Challenger, the planned layoffs were down 15% compared to the prior month. Why not? We're going into the summer months. A lot of temporary help gets brought on, not taken off. Canada reported a trade deficit with the rest of the world of nearly $100 million, $98.4 million. And we're looking at the Bank of England data showed the new home loans falling. You would expect that. I'm starting to read already now where in England, the big banks are moving out of London already, personnel, and moving them to other EU branches because they are getting themselves ready for the fact that Brexit is not going to go well, and it will not be business as usual, regardless of what Ms. May might think. Market groups, Chinese PMI, this is a real bad number, fell to 51.5 from 52.2. Now, any reading over 50 is still expansion, but this is the weakest we've seen since 2016. So their economy is definitely contracting, and that presents problems for everyone. I write about all this, as I keep alluding to, in the evening and in the morning, and then in the very early morning, I do a video. Before I do this one, about 8:30 in the morning is when I start recording. I review 40 charts, including a number of ETFs. I give you specific buy, sell, here's what I do ideas in them, really sticking my neck out a country mile. The whole idea there is if I can give you one idea that you had anyways, and maybe that pushes you right over where you have to be, maybe it's worth it. Call us to get put on this. Go to our website. You can click up here if you see me on YouTube. And under us on many websites, it says, click here for Ira's free offer. There is a caveat. If you've had a free trial before, I won't give you another one. You've had one. Become a subscriber at that point. That's why I pay for all these videos. I'm Ira Epstein. You have yourself a great day, and I will talk to you all later this afternoon in what proves to be a very, very wild trading day, in my opinion. It's going to get wilder. Take care.